Gretchen Morganson, in your book, Reckless Endangerment, next to the picture of James Johnson, you write this: a calculating political operative, Johnson was the anonymous architect of the public-private homeownership drive that almost destroyed the economy in 2008. Why so much on his shoulders?
You know, Brian, we have to go back in time. A crisis this large doesn't happen overnight. And if you really want to try to understand what happened to create this mortgage bubble and then the ensuing crisis, you have to go back to early 90s when Fannie Mae and Freddie Mac were under a little bit of pressure from Congress because of the S&L crisis. Congress was rightly concerned that maybe there were losses sitting in these mortgage finance giants that were quasi-public, quasi-private. They were public in that the government had started them, but they had private shareholders, so they were operating for profit. Congress was concerned there might be losses like in the S&Ls in these giant companies and wanted to make sure that they were overseen, that they were policed, and that they were not going to require taxpayer bailouts. And so we go back in time to 1991 when James Johnson takes over as the head of Fannie Mae, and he really takes this congressional urge or fear and turns it on its head. Because instead of having a regulator that's tougher, instead of having higher capital cushions required at the companies, instead of having a Congress that was more vigilant and watchful for a taxpayer bailout, he turned all that on its head. And what was created was a piece of legislation called the Safety and Soundness Act that was virtually written by James Johnson of Fannie Mae.
Okay, who was he? Or who is he? Still alive?
James Johnson was a Democratic political operator, had run Walter Mondale's campaign for president, was a guy who bridged Wall Street a little bit, had worked at Lehman Brothers in a sort of Washington, perhaps lobbying effort, but really did come out of Democratic Minnesota politics. That's where he was born, that's where he was raised, went to Princeton, and then came to Washington. And really understood the game, really understood the key thing he knew he had to do was to protect the government subsidy, to protect the implied government guarantee that stood behind Fannie Mae and its smaller brethren, Freddie Mac.
You read you another cut line under a picture of the Fannie Mae headquarters. You say Fannie Mae's sumptuous and sprawling headquarters in Washington was designed to resemble the governor's palace in colonial Williamsburg. I guess in seeing that picture and your description of it, I started thinking, I don't know that we've ever seen inside this place. Have you ever been in it?
I've never been in it. I've been writing about Fannie Mae as a political machine since the mid-1990s, so I am not a friend of Fannie Mae. But I've never been inside. Certainly some reporters have been inside, and there was, I believe, a Washington Post reporter that, you know, during Mr. Johnson's era was allowed to follow him around and, you know, did a very in-depth story on it. But the building itself is, I think, telegraphs such a message of power and, you know, royalty almost, and Fannie Mae really was that up until, of course, the taxpayers had to bail it out in 2008.
In the most basic of terms, what does Fannie Mae do for the generalist? How can we understand exactly what they do?
Fannie Mae is not a mortgage lender, but what Fannie Mae does is it buys mortgage loans that have been created by banks or other institutions. It sometimes holds them on its own balance sheet and reaps the income that the homeowner pays, or in other cases it pools packages of those loans and guarantees them and sells them to investors. So the enterprise essentially either owns or guarantees home mortgages. And it was set up in the aftermath of the Great Depression to try to keep housing finance wheels moving. So when you get into a banking crisis, as we certainly did in the Depression, home lending dries up. Nobody's willing to make those kinds of loans. So Fannie Mae was created to step in when the private markets for mortgages failed.
One of the things in your book is you talk about how much money people took out of it. I guess the overall question is, this is a GSE, a government service enterprise. How did a government-created enterprise have a sumptuous headquarters and allow people to take, I think Franklin Range, I think you said, took $90 million out of it over a relatively short period of time. How is that possible?
It's possible because of the implied taxpayer guarantee. What I mean by that is that Fannie Mae, like any financial institution, borrows money from investors in the debt markets. So they'll go out to investors and say, we want to raise $100 million or $10 million. What do you want for income that will make you buy that security? If you're Fannie Mae and you have this government-sponsored aura around you, you can borrow money at a far lower rate than other banks that don't have the implied guarantee of the taxpayer. So that difference between what you as an enterprise pay to borrow money from the public, that is very lucrative, and that is the subsidy, and that is where the riches came from.
Do we know how many people worked there?
How many people work there? Well, now it's probably much smaller because the enterprises are shrinking. They're taxpayer-owned. They are, almost in a situation where they're trying to reduce their balance sheet. But during the 90s, when they were ballooning their balance sheets, thousands of people worked there. And not just at this sumptuous headquarters, Brian. One of the things that they were incredibly shrewd about doing and that Mr. Johnson devised were these sort of grassroots efforts, offices, partnership offices they were called, that were across the country that were designed to create photo ops for politicians when they came home to their local constituents and to sponsor or participate in developments that looked good for the constituents and that looked good for the congressman. And so Fannie Mae was everywhere. It was really ingenious, just a brilliant strategic plan to really dominate the industry, to defang its regulator, to co-opt Congress, and to protect that very lucrative subsidy that I was talking about earlier.
Well, if you look back, I mean, since this crisis hit Fannie Mae, I know we have tried, by calling Fannie Mae and looking in the record books, to find the presidential appointed board members. They, as you know, since they became a GSE, a government service enterprise, they got 5 out of 18 the president could appoint. You can't find a list. Fannie Mae says, oh, write us a letter. Or there are all kinds of excuses that are given. You go to the congressional record, you can't find them. Who are some of the people over the years that have had presidential appointments to that board and also to the leadership?
Well, I'm thinking now, I have to rack my brains, but I remember certain members of the board. Jamie Gorelick was on the board or was a vice chairman. She at a very high level. I think Rahm Emanuel was
Freddie Mac.
Freddie Mac's board. So, we're talking about very high level people in Washington, in the elite power circles.
A lot of them Republicans and Democrats.
Oh yes, both sides of the aisle. Absolutely, both sides of the aisle.
Did they make much money as a member of the board?
Yes, they did. And the interesting thing, Brian, is that what you talk about, the secrecy, is fascinating, because can you imagine that this government-sponsored enterprise did not have to reveal what it paid its top executives? Now, as you know, public companies do have to disclose in proxy statements the amounts that they pay their top 5 executives. Fannie Mae and Freddie Mac did not have to do that. And when members of Congress had the temerity to ask for this information, they were shut down.
How? Why couldn't them?
This was the power of these companies. They would marshal their friends on the Hill, and they would beat back any attempt to identify the riches that the top executives were making.
I want to show you some video of Jim Johnson back in, let me just check it out, it's 1996 speech that he was making, and get your reaction to this.
Demographic changes like increased immigration and aging baby boomers have expanded the number of people who seek to own homes. As these forces all come together, they create tremendous momentum in the housing market. In watching the trends develop, we came to understand the urgent need for greater and more innovative financing so that more Americans could take advantage of the opportunity. Just 2.5 years ago, I announced Fannie Mae's $1 trillion commitment to finance 10 million homes by the year 2000.
What's he saying there?
He's saying that homeownership is a goal that we should all be pushing towards, and he was crucial to the government's public-private partnership to push homeownership. Bill Clinton came out with this Partners in Homeownership in 1995. Fannie Mae was right there. Jim Johnson was right there at the podium with him. It was a goal to increase the rate of homeownership in the United States of America. And the idea was that if you could allow more people to buy a home who had been shut out of the process, immigrants, first-time home buyers, minorities, that would be a greater good for the nation, because home ownership is good, even though there really was no proof that home ownership was, you know, a boon to everyone. There was this aura around it, wrapping yourself in the American flag. There's something about home ownership that's very noble and uplifting. But there was an awful lot of money to be made in this partnership, and you didn't hear them talking about the money to be made in this partnership, but that was also a huge motivator.
Some of the names, Mr. Donilon, who is now the National Security Council for President Obama, was working there, and Bob Zelnick, get the name right?
Zellick.
Zellick, I don't know why I said Zellick, who was with the Republican Party, was also over there. And Ken Duberstein, who used to be the Chief of Staff of Ronald Reagan, was a member of the board. But you see all these names. Tim Geithner is in your book, who is now our Treasury Secretary. What's his relationship to all this?
Well, Tim Geithner was the head of the New York Fed, the president of the New York Fed during the years when regulation became extremely lax in this country for financial institutions, and particularly in New York. Citibank was the purview of the New York Fed, and obviously they were not paying attention because Citibank became one of the biggest nightmares of the bailout brigade. And so Tim Geithner was really at the creation of this kind of belief that banks could set their own capital standards, that derivatives were a wonderful thing that spreads risk, and that financial innovation was not to be stopped. It was all this kind of mindset that really came down from Greenspan, I think, who said, you know, it really was anti-regulation, was not interested in making sure that financial products that were sold to people were not going to blow up on them 5 minutes later. And so there was a tone that, you know, bankers would never do anything so silly and stupid as to take the risks that would blow themselves up. That was Greenspan's notion, and he later apologized for it, saying he can't believe that they didn't understand that they were taking these risks. Geithner was a big part of that mindset and a big part of that regime where bankers were really allowed to kind of set their own rules and capital standards.
You spent a lot of time in your book talking about people. I'm going to name some of them and get you to tie it all together. Sandy Weill.
Sandy Weill was crucial in the late 90s, crucial in getting the elimination, finally, of Glass-Steagall. Glass-Steagall was the Depression-era law that had separated investment banking from commercial banking, protected us from rapacious bankers pretty well for 70 years. Finally, Sandy Weill and his friend Robert Rubin at the Treasury Secretary drove a stake through Glass-Steagall's heart. It was dead and gone. Sandy could amass an empire known as Travelers Group, which then merged with Citigroup. Citibank to become Citigroup. He was a beneficiary of the elimination of Glass-Steagall.
And you say that Robert Rubin, who was Treasury Secretary under the Clinton administration, went back to Citigroup after that. Did I read you said $100 million job or something?
I think it was $115 million over time, being a sort of eminence grise at the company on the board, who didn't really have to do much, but certainly made a lot of money doing it.
But Robert Rubin is a Democrat, and then you mentioned earlier Alan Greenspan, who's a Republican or something on the other side of the right of center. Is this a political matter?
This is, again, across the aisle. This is, homeownership was this push that really involved both Democrats and Republicans, private sector and public sector. It was a push that really asked regulators to team up with the regulated entities, which was highly unusual. You know, so it was a all-in effort to push homeownership to what I think Clinton wanted it to be 70% in the year 2000. He didn't quite get there. They got to 69.7 or something like that.
Well, I remember hearing President Bush brag about the percentage up to 69% or something
exactly,
like that.
Exactly.
Wasn't this good, though?
Bush carried the standard also. Isn't it good?
Isn't it good that people own their own home, and isn't it good? Isn't that a role the government should play?
This is the conversation we need to have in this country that nobody is willing to have. Okay? What role should the government play in housing finance? If you want to subsidize housing in this country, and we want to talk about it, and the populace agrees that it's something we should subsidize, then put it on the balance sheet and make it clear and make it evident and make everybody aware of how much it's costing. But when you deliver it through these third-party enterprises, Fannie Mae and Freddie Mac, when you deliver the subsidy through a public company with private shareholders and executives who can extract a lot of that subsidy for themselves, that is not a very good way of subsidizing home ownership. I think we've seen that at the end of that movie in 2008.
How much money has the taxpayer had to pay to bail out Fannie and Freddie?
At the moment, it's $151 billion.
Will we ever see that money, as the taxpayer see that money again?
It's possible that it will decline, that loss will decline somewhat, but we will never break even. We will never make money on it. It is always going to be some sort of a loss to the taxpayer.
Who else was a loser in this process? Did Fannie and Freddie have a stock that they traded?
Yes. So shareholders who were caught at the end of the line when all the troubles were coming forward and all the losses were accumulating, those shareholders lost. A lot of smaller banks who bought the debt issuance or preferred stock of Fannie and Freddie were losers because they thought that they were, money good. But the debt holders came out fine because the government backstopped it. All those years that Jim Johnson and all of his colleagues said that no taxpayer dime would ever have to be extended to Fannie Mae, of course, was proven to be false in September of 2008.
Here's another clip of Jim Johnson. This one is from 1998.
And that is, with all of this success, it seems to me those who would change this system really should take on to themselves the burden of proof that their change will improve on the successes that we've had. Will their system lower the cost of mortgages for average families more than this system? Will their system guarantee liquidity in the system, which of course is part of what makes this all work, where we essentially now have a national mortgage system where you can get the same mortgage rate in virtually any part of the country at any time? Will the new system, or what changes are going to be made, assure liquidity more certainly?
What do you think they were thinking at the time?
When he was saying that?
Yeah, I mean, were they doing things for the betterment of the country, or do you think they had other goals?
Well, I think that what they were doing was they had come up with a masterful way to extract money for themselves while pretending to do something good for the country. Okay, home ownership does sound like a good thing, and if you can pass on savings to borrowers, that is a good thing. And if you can allow people who are not typically home buyers to enjoy home ownership, that's also a good thing. But in this way, it was actually corrupt, because it was a company that was designed to make profits for the shareholders and paid its executives immensely well and used a lot of that subsidy, again, that the taxpayers stood behind. The reason that Fannie Mae was so wealthy was because it didn't have to pay as much to borrow money. That money it used to buy members of Congress, to put out these partnership offices, to put the PR out there that Fannie Mae was a do-gooder. It helped them get the message out with advertising that actually inserted themselves in presidential elections. I mean, this was all about protecting this subsidy, and so they would do whatever they had to do to protect it.
If you're Jim Johnson and you're sitting at your desk at Fannie Mae out on Wisconsin Avenue here in Washington, and you're looking out at the world, what were, you mentioned the partnership offices. How big were those partnerships? I know you said there were 55 of them at the time you wrote the book. How big an office would that have been out in the field?
A couple of people, but they would often hire family members of congressional members. So you would be sure to make sure that you were, helping your friends back in Washington. Another ingenious thing that he came up with was to create a foundation, or to fund the Fannie Mae Foundation with Fannie Mae stock, which was at that point in time going to the moon because the company was so profitable. Well, what he would do with the foundation money was he would pay academics to write articles that were very pro-housing, pro-home ownership, pro-Fannie Mae and Freddie Mac. And so he ended up co-opting almost the entire academic community as well by paying them well to write favorable, research about the benefits of home ownership and how Fannie Mae was delivering on its goals.
You suggest in here that I think Joe Stiglitz, who's a Nobel economist, and Peter Orszag wrote.
Yes, and they did a piece together talking about, I believe, the likelihood, a very small likelihood, they said, of Fannie Mae ever really requiring a taxpayer bailout.
So Jim Johnson sits at his desk, he's got the partnerships across the country, he's got the foundation. Who ran the foundation? Anybody? Was it a political job?
He would put people on, he would put sort of local politicians, as I recall, were on the foundation. Then he would put pro-housing advocates on the foundation from across the country.
And that money to form that foundation came out of the treasury of Fannie Mae?
It came, he put in a big chunk of stock, I forget how much, but something like $350 million, or maybe that's wrong. But anyway, a lot of money in Fannie Mae stock, and as it grew and as it became more and more profitable when they were ballooning the balance sheet in the 90s, that amount grew. And so the foundation was immensely wealthy, and you could deploy that money any way you wanted to get the word about the good deed doers at Fannie Mae.
Now, I read that the foundation was folded back into Fannie Mae. Is it still active? Are they still giving money away?
No. It's a shadow of its former self. They stopped when the taxpayers took it over. They, I think, basically shuttered the foundation.
Now, the Supreme Court justice makes a couple $100,000 a year. The President of the United States, $400,000 a year. How much does the Fannie Mae president today make? Do you know?
Well, today they don't make as much as they did in the heyday because, again, they're taxpayer owned. It wouldn't look good for the CEO of either of these enterprises to be making tens of millions of dollars as the CEO of Goldman Sachs does when the taxpayers own them.
But why should they make more money than the President of the United States?
Well, they do, and the reason that they will give you is that it's a very complex company. They have to really understand the ins and outs of the business, and hedging the risks of the company's big mortgage portfolio is very complex, and they have to oversee it. That's what their argument is. So I think they make probably $2 million a year, $1.5 million a year.
But what happened to public service?
You tell me what happened to public service. I mean, public service is a thing of the past, and certainly was never what Jim Johnson viewed Fannie Mae as.
Here is a gentleman that you write a lot about who testified on Capitol Hill, and it's former Congressman Ken Jorsky from Pennsylvania questioning Mr. Mozillo, and I'll ask you more about that.
Why didn't our Federal Reserve, why didn't our SEC, as Mr. Cummings asked the question, why didn't our Treasury Department see the same statistics that I got on 18% failures of mortgages in securitized pools? Why didn't they see this? Do you have an answer, Mr. Mazzulli? You ran the company with the largest number of these. Did you participate in putting pools together?
Yeah, we did. Certainly we did. As Mr. Prince pointed out, these things happen over time, so you're not finding out instantaneously.
No, this was for the year 2006.
Yeah, right. And we immediately, first of all, we investigated each of these loans as to what the cause of it was, and it was a variety of causes. One was
mostly people didn't have the income, they didn't have a net worth, and they should have never been in those loans. Isn't that the cause?
That's not generally the cause, because people who are sincere about living in the house and want to preserve their house will make the payment, or will contact us to see if we can help them work it out.
What do you think?
I think that a lot has happened since those words were uttered to make them seem very dubious.
It was 08 when that testimony was actually March of 08.
Well, that was really before the crisis, of course. September was the depths of the crisis, and then 2009 the stock market hit a new low, or hit the lows. But I think that you know, Mr. Mozillo really was probably not as truthful as he could have been about the state of his company. It turned out the SEC sued him for insider trading, and in that case they turned up emails in which, or correspondence with other executives at Countrywide, in which he called the loans that the company was making toxic and poison, and publicly was, of course, raving about the company's financial position and how well it was doing. So, you know, there was definitely a dichotomy between the private musings of Angelo Mozillo and the public declarations that he made.
In your book on page 186, but Mozillo recognized that lobbying might not be enough, and he soon began inviting people with deep political connections to join his company's board. Then you mentioned Henry Cisneros, who's former head of HUD and the mayor of San Antonio, the Clinton-appointed Secretary of HUD from 93 to 97. Cisneros was also on the board of KB Home, and I don't know what that is, but you say that Jim Johnson was on the board of KB Home, and Jim Johnson is still on the board of Goldman Sachs.
Yes. And still on the board of Target.
And by the way, has he been, is there any evidence that he did anything illegal?
The only thing that was alluded to in his era at Fannie Mae that was questionable came out in the OFEO report. This was the oversight, the regulator for Fannie and Freddie, that conducted an enormous investigation into the accounting scandal that erupted at the company in 2005. And what they found was, the investigation found that executives at Fannie Mae would do whatever they had to do, move mountains to make sure that they made the earnings number that Wall Street was looking for and that would generate their sumptuous bonuses. And that practice began, according to the OFEO report, under Jim Johnson.
So was there a follow-up by the government to check that out and do anything in the way of
By
investigation?
the time that investigation came out, he was long gone.
Is there any clawback provisions in our government to get some of this money back that these folks who were involved in Fannie Mae, Freddie Mac, and all these GSEs have benefited from, but the taxpayer loses the whole thing?
That's right. There are laws that regulators can use to claw back compensation. They have not been used very aggressively. The main one is the Securities and Exchange Commission, under the Sarbanes-Oxley law of 2002, is allowed to claw back incentive compensation in cases where the companies have been found to have cooked their books. Now, here was one of the biggest book cooking fests of all time, Fannie Mae. And, you know, they got some money back from Franklin Raines, but not very much. And here's the pièce de résistance.
Franklin
Raines was the CEO at the time of the accounting scandal. And the pièce de résistance is that the United States taxpayers continue to pay the legal bills of Franklin Raines and two of his cohorts in their defense against shareholder litigation in the accounting scandal.
Have any of these folks that ran Fannie Mae ever come public? I mean, I don't know that I've seen Jim Johnson anywhere, and he's still very much involved in businesses and all. And isn't he a part of the Perseus Corporation? It's based here in town.
Private equity.
Yeah.
Merchant capital.
Has he or any of the other people in Franklin Raines gone public with any of the way they feel about this?
Franklin Raines, I think, has started to come out and talk about housing finance. I think he was on a panel a couple of months ago here in Washington. Jim Johnson, I think, is keeping a pretty low profile, but as you say, he's on the boards of Goldman Sachs and Target. He is the compensation committee chair of both Target and Goldman Sachs. But it was interesting this year, a very prominent and prestigious shareholder of Goldman Sachs came out with a public letter urging investors to vote against Jim Johnson's re-election on the board of Goldman and Target because the investors said he had been involved in quite a few questionable scandals or had been near to, and they cited his years at Fannie Mae.
We have another clip of Angelo Mozillo. Before we do that, where is he today? I mean, you say he took, what, $400 million out of Countrywide?
He sold stock worth about $500 million in the last few years of the company's history before it was sold in a fire sale to Bank of America. This was when the boom was ending and he was selling stock hand over fist. So $500 million was the amount of stock that he sold just in that period. And there were many, many years. He was a founder of the company. He took a lot of money out of it, had huge salaries, etc. So that's only a portion of what he took out of the company.
But what did he do that was wrong?
Well, the SEC contended that because he was making these private statements that were different from his public statements, and that he was selling stock at the same time, that was insider trading, that he was trading on that he had non-public information, and that he had increased the amount of shares he was selling because he knew that the end was near. Has
he been charged by any entity of doing anything illegal?
No. And the SEC settled with him for $22.5 million.
Here's Mr. Mozillo again from that same hearing.
Generally, these are speculators. Didn't work out for them. Values went down. They abandoned. And a lot of it was fraud.
How long did it take you to come up with the understanding that there was this type of an 18% failure rate before you sent the word down the line, check all of these loans or future loans for these characteristics so we don't have this horrendous failure?
Yeah, I mean, within if we don't get a payment the first month, we're contacting the borrower, attempting to contact the borrower, and that's part of what we do, and we're adjusting our guidelines.
I understand you do to the mortgage holder, but don't you put all those together in statistics and saying these packages we're selling now are failing at such a horrific rate that they'll never last, and there'll be a total decimation of our business and of these mortgages?
Well, gentleman's time has expired, but please answer the question.
As it was pointed out, these mortgages are put in very complex securities that have a lot of tranches to them. So it's very difficult to see a loan or a series of loans. Are they in that particular security or another security? The only one who would know that would be the security holder.
The language that people use, tranches, what does that mean?
Oh, it's just that they slice and dice these securities in different ways. Higher level, higher quality loans down to the, toxic waste. It's fascinating to watch Mr. Mozillo now with the benefit of understanding the foreclosure crisis and what has happened to so many people who were lured into these loans, losing their homes, losing, their credit score. It's really been a brutal couple of years. And Countrywide was, as you remember, the largest single supplier to Fannie Mae of loans. And so Mr. Mozillo didn't have to worry about every loan he made because an awful lot of them went to Fannie Mae and therefore were at the taxpayers' bottom line.
Later on in your book, you say Johnson, meaning Jim Johnson, was an early initiate to the VIP program. Starting in 1998 and continuing through 2007, Johnson received 6 cut-rate loans from Countrywide, worth a total of more than $10 million. And then you go on to list a bunch of others, including Kent Conrad, Chris Dodd, Barbara Boxer, Donna Shalala, Richard Holbrook. I guess he was in business with. These are all, this particular list, all Democrats. Were there any Republicans?
I think there were some Republicans. I think I know that Bob Bennett, his son, ran one of the partnership offices. So again, there was across the aisle, participation here.
How good a deal was this VIP program?
You know, it's hard to know because you didn't really understand what the rates were, but you can be sure that they got special treatment as far as speeding up the process, a lower interest rate, so those kinds of things. And a lower interest rate has a real benefit over time, of course, in a mortgage.
You say at the beginning of your book, Josh and I, first of all, who's Josh?
Josh is my fabulous co-author who is a genius in the analysis of financial institutions and housing finance in particular. His name is Josh Rosner, and he's an analyst at Graham Fisher in New York. He and I were, we had never collaborated before on a book, but he had been a source of mine for many years, and he was one of the first to call out the home ownership goals as potentially faulty, and among the first to really point out that the kinds of mortgages that they were making were really going to lure people in and create problems. So he was very perspicacious and on the forefront of questioning a lot of this conventional wisdom.
Josh and I felt compelled to write this book because we are angry that the American economy was almost wrecked by a crowd of self-interested, politically influential, and arrogant people who have not been held accountable for their actions. But isn't there another way of looking at it, that these people just figured out how to use the system? And it's most of the time fair and honest, and I don't know, I'm just not trying to put words in your mouth, but they're sitting out there saying she's got a grudge.
Well, I have a grudge if it means weighing the taxpayer down with $151 billion in losses. Okay, I have a problem with that. I have a problem with allowing companies to take reckless risks, pay themselves immensely as they're doing it, and then when the bill comes, when the risks show up to be problematic and the loans that they made go bad, they don't have to pay the freight. The taxpayer pays the freight. That I have a problem with, and I think a lot of people in this country have a problem with that. So I don't have a problem if people are, operating within the confines of prudent business practices, and if they're being paid very well to manage risks and they do that well. I don't have a problem with that. I have a problem with taking reckless gambles, reaping enormous profits doing it, and then walking away with your money and leaving the taxpayer holding the bag. That's what I have a problem with.
But why have they all been able to get away with this over the years and take so much of the taxpayer money without, what's the answer?
Well, in this particular case, the answer was that they were able to wrap themselves in the American flag of home ownership. Jim Johnson was able to argue that if you touch the system, if you fiddle with this system, if you change it, like you said in the clip, are you going to be able to deliver a home loan at the cheap rate that we will? This was always the threat that was held over people who criticized the business model of Fannie Mae. It was always, you're anti-home ownership. You're anti the American way. But what he's not saying is that of that subsidy, he's only passing on to the borrower 2/3 of it. He's keeping 1/3 of it to himself. And that is an inefficient way to subsidize housing.
I want to show you a clip of a recent speech that you made, and I want to ask you a lot of questions about this.
I'm a tough reporter, and I like being a tough reporter, but it's hard. You have to have a backbone. You have to have an editor who's willing to stand up against the pressures, which are immense. And you have to have a different mindset. You don't want to be a part of the party. You don't want to be invited to the people's houses who you cover. You don't want to be feeling like you're part of that scene. And there are a lot of journalists who unfortunately get sucked into the idea that they can be friends with the people that they're covering. I don't do that kind of journalism, but I think that it's unfortunate that there are quite a few who do.
Explain more of what it's like to be a tough reporter.
Well, for me it's fun. It allows me to get to the truth, which is really what I'm after.
How do you do it?
Business reporting is a lot cleaner and a lot easier than political reporting, I'll tell you that. There's a lot of public information. There's a lot of government documents that companies have to file that really can reveal immense amounts of information. I get people calling me over the transom who are whistleblowers, who are upset about what they see happening in an organization or in some practice or other. I have people that I've known forever on Wall Street. I was a broker myself on Wall Street long ago. So I have a lot of contacts from my years on the street, and believe it or not, there are a lot of people who really they know Wall Street can be honest, and it is an honest place for many people, and they don't want the bad apples any more than I do or you do. And so they will call me and tell me about practices that they find disturbing.
How do you avoid being friends with the people that you cover? And why did you say so many journalists are friends with them?
Well, I think you look at it this way. I call it access journalism. You know, in many types of reporting, you're relying on people to deliver you something that you can't get any other way, particularly in political reporting, Washington reporting. You're relying on someone dropping a classified document in your lap. And then you have to, you're thrilled to have it, but then your trick is to explain to the reader how you got it, and knowing that whoever dropped it in your lap had an axe to grind with dropping it in your lap. Business reporting, you don't need to do that. You can do your work. There's so much more information available. You can do what we call write-arounds, where you write around the person. They don't have to participate. It's much harder, I think, in political reporting. But so what I do in business reporting is, I don't get invited to dinner at these people's homes. I am the skunk at the garden party, and I like it that way. But I stay to myself. I go home every night to my husband and my son, and that's the way I like it. I don't believe in socializing with the people that I'm covering. It's just that simple.
What's the downside for you for that? I mean, what do you miss?
You know, the downside is that I will not get the piece of information that someone wants me to have that makes them look good.
And why do you want to do this? Interesting thing is that you went to school in Minnesota at St. Olaf's, and Jim Johnson's from Minnesota. Do you know him?
No, he would not talk to me.
How long ago did you ask him?
I got the silent treatment. I asked him perpetually over the time that we were writing the book, and I never received even the courtesy of I'm not going to return your call.
What about Mr. Mozilla? Would he talk to you?
No, he's never spoken to me either.
What about Barney Frank?
Yes, Barney Frank spoke with me. Some people, I like to sort of separate. There's two kinds of people in this story, Brian. One are the housing zealots, the people who really believe that home ownership is worthy and a worthy goal, and we should push for it no matter what. I would put Barney in that category. It wasn't that he really personally benefited. And then there are the people who want the personal enrichment from the public-private partnership, people like Jim Johnson and Franklin Raines. So there's two kinds of people, I think, in this story, zealots and then the personal enrichment schemes.
But you do say under the cut line, or in the cut line under Barney Frank's picture, that Congressman Massachusetts, staunch protector of Fannie Mae almost to the end. Frank requested that Fannie hire his partner in 1991 when Congress was devising regulations for the company.
Yes.
Did they hire him?
They did.
What's his name?
I forget his name. I'm sorry.
I can look here. I think it's Herb Moses.
Yes, Herb Moses. Herb Moses, yes.
So they did hire him.
They did hire him.
How often was that done? Not for Barney Frank, but for anybody that you mentioned earlier, Senator Bob Bennett.
It was done like that, constantly. Can you imagine saying no to such a thing. I mean, if you're Fannie Mae, you want as many chits out to people as you can possibly have, and if it means hiring someone, and particularly in this case, I think Mr. Moses was an able candidate for the job, but what I was told by people who were there at the time was that he, you know, was interviewed extensively throughout the company. They were looking for just the right spot for him. Well, you'd have to be insane not to give Barney Frank, you know, do him a favor, because he is, you know, on the Financial Services Committee, which of course is the entity that oversees your regulator and that, you know, calls you to testify. So I think that was pretty common practice.
Where did you grow up?
Where did I grow up? I was born in Pennsylvania in State College, spent some time in a small town outside of Toronto. My father was an academic who kept getting additional degrees. Spent a year in London when he got his PhD, and then went to southwestern Ohio for high school and college in Minnesota. Came back to New York immediately, and I've been there ever since. So most of it Midwestern. I have a lot of Minnesota genes. My father was born there, my sister was born there, my mother's father was born there, so a lot of DNA from Minnesota.
Is Morganson your maiden name or your
Yes.
married name? Is that, I mean, you say that Jim Johnson was Norwegian by
Yes.
ancestry. What's yours?
I am Norwegian and Danish. Half English, 1/4 Norwegian, and 1/4 Danish.
So what's your sense of why you think so much differently? You come some of the similar background than a Jim Johnson. He worked for Vice President Mondale. He's, you know, he was there.
I wish I could tell you. I really wanted to have an interview with him because I really wanted to reflect his point of view. And Josh and I were eager to hear him out on this. But, you know, I can't tell you because I never even got a chance.
One of the things in your book, you keep reading all these connections in this town. And in this case, these folks were making millions and millions of dollars. Why didn't anybody stop it?
People did try to stop it.
Who?
There's a wonderful anecdote, wonderful episode in the book where the CBO, the Congressional Budget Office, in the mid-90s, decides to do the unthinkable, decides to try to calculate the amount of the subsidy, to calculate what Fannie Mae and Freddie Mac got in terms of a government subsidy, this lower cost of capital, lower cost of debt that they had. It had never been done. The company did not want it to be done because they didn't want anybody having any inkling of the billions of dollars of this subsidy every year that they were reaping. They also always told you that they passed along every nickel of it to the borrower, which CBO also wanted to test. So Marvin Fopp, who was a research analyst at CBO, took this on as a study, came up with the figure, a kind of, you know, calculation of how much the subsidy was. It was, I think, $6 billion or something in 1 year, Fannie and Freddie. This was in the 90s when that was real money. And so he is going to deliver this, well, through June O'Neill, who was the head of CBO at the time, is going to deliver this research to Congress. And there's a wonderful moment where, after they've done all the work and all the analysis, Fannie Mae asks for a meeting with June O'Neill. And so she invites them in.
Head of the Congressional Budget Office.
Head of the Congressional Budget Office. The researchers are in the meeting with 3, I believe, henchmen from Fannie Mae. And they try to persuade June O'Neill not to publish this research. And it was, you know, a big threat to them because nobody knew that $6 billion was the size of the subsidy. And Mr. Fopp had also determined that 2/3 of that subsidy was all they passed along to borrowers, that they kept 1/3 of that to themselves every year. That's a lot of money. And so this was a threat to them. And they wanted to make sure it wasn't public. And so they pushed and they pushed. And June O'Neill told me she felt like she'd been visited by the mafia. But she stood up and said, "I'm sorry, gentlemen, they couldn't poke any holes in the arithmetic." It was all, again, these bromides about home ownership. You're going to, you know, make it harder for people to own a home if you print this research. This was their typical default position. And so she got up and said, "Gentlemen, I'm sorry, we're going to publish this research. We're proud of it. We know we did a good job." And so they did. And she went to deliver it to Congress and was savaged by all of the Fannie Mae and Freddie Mac protectors who were members of Congress at that time.
By the way, do you happen to know whether or not the board members appointed by the president had to be approved by the Senate?
I don't know the answer to that.
We should still try to find this list of people.
You've piqued my curiosity. I now have to go back and do it.
Well, it's one of the things about this town is trying to get the information, and that's what I want to ask you next is, how hard was it for you to get this information, and how long did it take you to do this book?
Well, Josh had a lot of the information in his notebook because he had been following the company for years and years. I had some in my notebook because I had been following the company and writing about it since 1995 or 6, when I was at Forbes and then later at the paper. So it wasn't starting from scratch. We both had a lot of experience with the area, with, then the crisis occurred. We lived through that. So we really, I think it took 9 months to write it.
Is there information that you'd like to have? And I mean, that's obviously, there's all kinds of information like that, but is there information that you can't get to in Washington, D.C., or in the government because there's an excuse for holding it up? I mean, you mentioned something in here about HUD was able to hold back information on mortgages, but on a day-to-day basis, how much information is being withheld from the public?
Right now, it's hard to say. I mean, I think early on there was quite a bit of control of the information. Interestingly, covering the financial crisis from Wall Street was easier than when it moved to Washington. Washington became a much more confined, closed shop and harder to get information. I remember, just as an example, when Treasury started one of their programs for loan modifications, we were trying over and over to get information on how many borrowers had been able to be helped by this program. And it was like pulling teeth. You might as well have been asking for the formula for Coca-Cola. Nothing. They would not tell us. They would not tell us. And it was ultimately because the program wasn't doing very well. So yes, there's a lot about, certainly what I would love to know are, who's meeting with whom, whose lobbyists are meeting with, high-level, regulators, with members of Congress. That interaction, I think, would be fascinating to know, and it's just very, very difficult to come by.
How much money can Fannie Mae now use to lobby?
They're not allowed to lobby anymore.
How much money can Fannie Mae use to contribute to political campaigns?
I don't think they're allowed to do that anymore. I mean, I think a lot changed when the taxpayers took them over. They had to give up the foundation. They gave up the partnership offices. I know they gave up the lobbying. They're not supposed to lobby. So, it was a changed world after Labor Day 2008.
What's the chances that the American people will be able to see inside the sumptuous headquarters of Fannie Mae, or for that matter, Freddie Mac, which we haven't talked at all about?
I don't think that's very likely. I mean, I think that the companies are now hunkered down. They are wards of the state. They're certainly not the aggressive, swaggering about town entities that they once were.
What percentage of the mortgages in this country are still owned by Freddie Mac and Fannie Mae?
Oh my gosh, they're dominant. I would say 80% of mortgages are either backed by or owned by. I mean, there is no really good mortgage market at the moment. Fannie Mae and Freddie Mac are pretty much it. FHA also.
In the middle of your career, you worked on Wall Street for a while, but you also served as press secretary to Steve Forbes. Why?
Wow.
When he ran for president.
I thought it would be interesting. This was in 1995. I had a kind of a newborn child, which was really crazy that I would do that. So I didn't travel as extensively as most press secretaries do. I was at Forbes magazine at the time, working on the editorial side, a reporter and an editor. And so when Steve, who was on the publishing side, asked me to do it, I thought, gosh, that might be kind of interesting. I had wanted to be a political reporter growing up, and so I thought this would be kind of cool. Well, 6 months of hell. He folded after 6 months. But it was very interesting, Brian, because I got to see the other side of the notebook. So I was working with journalists. And so it really helped me to become a better journalist.
What did you learn about journalists?
Well, in this particular case, they traveled in a pack. They didn't really care to understand what, some of the ideas that the candidate had. It was very sort of the perception was that he wanted a flat tax so that he could enrich himself. That was about as in-depth as the analysis got. And you know, I'm a person who likes to dig and delve and get to the bottom of something. So, you know, the kind of superficial approach of the campaign, which I understand because you're, you know, under the gun day in, day out, was really kind of news to me.
You can read you usually every Sunday on the front page of the business section. Matter of fact, today we're recording this. You're on the front page of the New York Times with a story about Merrill Lynch and Bank of America. What are the rules for you at the New York Times? How much can be opinion? How much has to be reporting? And who do you answer to?
My columns, which appear on the front page of the Sunday business section, are reported columns. That means that they are backed by fact, that I'm not just sitting gazing at my navel and then opining about what I see. I really am. It's really more reported columns. You know, it's not overwhelmingly opinion. I really love to report, and so what I do is kind of a little bit more on the reporting side than on the opining side. I also do news stories, as you say, that appear in the Daily occasionally, so that's a little bit of a difference. A lot of other columnists don't do the news stories, but I really like to keep in the mix and, you know, keep up with what's going on. So I do that. Who do I report to? I report to the Sunday business editor. His name is David Gillen. And then I report to the business editor of the paper, who's Larry Ingrassia.
We only have about 90 seconds. As we look ahead, this whole thing you've been writing about, do you have any hope that this will never happen again?
I don't, unfortunately, because we haven't solved the crucial problems. We have not fixed the peril of too big to fail institutions. We have not resolved Fannie Mae and Freddie Mac. We have not had that conversation about the role of housing finance in this country that you brought about at the outset. We need to have that conversation. Josh and I were hoping that this book would create that conversation so people could have a discussion, a robust discussion, and then decide. But we haven't done that. We haven't gotten near to that. And so therefore, I think the chances of another crisis are pretty great.
You planning another book?
I am not.
Why not?
I'm tired. I have a day job, and the day job is pretty demanding. I did not take a book leave to write this book, so you know, I think that unless it's something really super compelling comes along, it would have to be very compelling for me to take on another project.
By the way, who named it Reckless Endangerment?
You know, we came up with that ourselves. We tried on a lot of different things, Josh and I, but that really stuck with us, and the publisher was fine with it.
Gretchen Morgensen, author with Joshua Rosner of Reckless Endangerment, How Outsized Ambition, Greed, and Corruption Led to Economic Armageddon.